Traders are predicting another week of wild swings is likely for the stock market. Let's bring in Michele Schneider, Chief Market Strategist at MarketGauge. Mish, the fluctuations in the market are not easy for investors to watch. As an investor, how are you handling all the rocking and rolling in the market? What are some stocks that you would invest in for the long run?
Well, in my own personal finances, I really don't invest per se, unless it's something I really feel very strongly about in the long term, and I don't mind sitting with the gyrations. And so the latest one, I think, example would be, well, actually two. One would be Rivian. I have not, even with all the gyrations that's happened over the last couple of months, really thought about getting out of that. If anything, I'm waiting for stabilization to add. But otherwise, generally, and the other one I was going to mention would be Vietnam, right? So Vietnam was another one that got hammered with the tariff announcement and now is back into the area I want to see it hold. So that doesn't mean I wouldn't get out if those bottom lines over the last horribleness break down for money management. But generally, what I will do is I'll put on a position. If I get a cushion, I go to no loss stop. And I have immediately a stop loss in mind, even when I put it on. In fact, I won't put on a position unless I see a good stop loss and I know what I'm looking for on the upside.
What's your biggest tip to everyday Americans?
And I get to speak to a lot of everyday Americans because the stock market's on the lips of people who never, ever talked about the stock market before. I think most people are bracing themselves for a recession. I mean, that's whether it's true or not. That's how people are thinking. And so what I would tell the average Americans, and this is exactly what I just told somebody yesterday, is that you have to have two heads. You have to have the one that protects your money over the long term, and the long term could be the next year or two or three, depending on your age. And then you have to have the philosophy over the next 10, 20, 30 years if you're a younger person. And so, at this point, if you're down 30% and you can afford it, great. But if not, if we get any kind of rally and you can take some of that risk off, do it. If you don't care, well, that's a whole other story.
Always good to speak with an advisor first, or advisors these days. We thank you, Mish.
Thank you so much.